Is your wealth really built to survive a storm? Most people don't find out until it's too late. Every headline screams crisis. Inflation rising, markets falling, global conflict, jobs at risk. It's no wonder so many people feel paralyzed. The instinct is to pull everything out, hold cash, and wait for calm. But that instinct comes at a price most never calculate. Disruption is not new. The 2008 financial crisis wiped 45% off UK markets. COVID crashed them 35% in weeks. Yet every single time, markets recovered and went on to reach new highs. The pattern is remarkably consistent. Up close, every crash looks catastrophic. The 2008 crisis, COVID, the dot-com bubble, each one felt like the end. But pull back to a 50-year view and something remarkable happens. Those crashes become barely visible, short-term noise on a long-term upward trend. Over every rolling 20-year period in the MSCI World Index, investors have seen positive returns. The average annualized return of global equities over 30 years sits at around 9%, even accounting for every crash along the way. That is the power of staying invested. 3 strategies separate those who weather disruption from those who don't. First, diversification. Spreading your wealth across different asset types, equities, bonds, property, and cash cushions the impact. Second, regular contributions. Investing consistently through downturns means acquiring assets at lower prices. Third, an emergency fund. Cash reserves prevent you from being forced to sell investments at the worst possible time. Here is what panic actually costs. After the 2008 crisis, the FTSE 100 fell nearly 48% from its peak. An investor who sold at the bottom and waited to feel safe missed a recovery of over 90% in just 5 years. An investor who stayed the course saw their portfolio more than double over the following decade. The cost of panic is always higher than the cost of patience. Disruption is certain, it always has been and always will be. But your response to it is the one thing you control. That choice shapes your financial future. Remember, markets recover, discipline compounds, and time is your greatest asset. Review your financial plan, stress test your portfolio, build your emergency buffer. And if you have any questions, speak to Sussex IFA. Don't let headlines write your financial story.